This video contains synthetic content which has been approved by Rick Kimberley and RSM Australia. Now we have covered that. Welcome to our Global Employer Services update for the month of April 2025. In this month's video, we'll take you through key developments across fringe benefits tax, payroll tax, contractor arrangements, wage compliance, and pay-as-you-go withholding. Let's dive in. With the 2025 FBT season now underway, we wanted to rehash a number of key developments that apply from the 1st of April 2025 and are new or updated for the 2025 FBT year. These updates may impact your reporting obligations, record keeping, and FBT liability, particularly in relation to vehicles, substantiation, and ATO compliance focus areas. From the 1st of April 2025, plug-in hybrid electric vehicles, PHEVs, will no longer qualify for the FBT exemption for zero or low emissions vehicles. However, employers can continue to apply the exemption where the PHEV was first used or available for use before the 1st of April 2025. And there is a financially binding commitment to continue providing the car beyond this date. Note, optional extensions are not sufficient. The ATO has now also completed its consultation on how to value both electricity and petrol costs for plug-in hybrid electric vehicles, PHEVs. While PCG 2024-2 outlines a method for calculating home charging costs for electric vehicles, it does not apply to PHEVs, which rely on a combination of electricity and petrol. New guidance specific to PHEVs is expected later in 2025 and will provide a simplified approach for calculating the cost of both fuel types. New from the 1st of April 2025, employers may now use corporate records, for example, system reports or payroll data, in place of certain employee declarations and travel diaries. This applies to a range of common declarations, including living away from home allowances, vehicle and relocation travel, and otherwise deductible expense claims. Employers can choose to use either the traditional declaration forms or alternative records, but must have the required data available at the time of lodgement. The ATO has confirmed that motor vehicles remain a key area of compliance concern. Employers should take note of the following specific items. Vehicle classification. Ensure vehicles are correctly categorized. For example, passenger cars versus commercial vehicles, as this impacts the FBT treatment and available exemptions. Second is the quality of logbooks. The ATO expects detailed, accurate, and representative logbooks. Incomplete or inconsistent records may be disregarded, leading to higher FBT liabilities. Thirdly, employers need to remember that private use of vehicles is subject to FBT. Travel between home and work, school pickups, and lunch trips are generally considered private use and attract FBT. Finally, employers need to consider employee contributions. These must be properly substantiated and correctly reported in both the FBT return and the employer's income tax return. The ATO is also reviewing nil returns and non-lodgement notices more closely. Employers submitting a nil return should be confident that no fringe benefits were provided in the year. Further to the previous slide, and as part of a wider data matching initiative, the ATO is sending letters to employers where it identifies potential FBT risks, particularly where company-registered vehicles are not included in FBT lodgements, and the vehicles may not be used solely for work-related purposes. To the extent you have any vehicles on your fixed asset register, please consider whether there are FBT obligations. Now we will touch on a recent development in the contractors and payroll tax space. In Roofing Services Queensland v Commissioner of State Revenue, the Queensland Civil and Administrative Tribunal largely upheld the Commissioner's reassessments that treated payments to various contractors as taxable wages for payroll tax purposes. The case focused on whether exemptions to exclude contracts where services are performed either by multiple persons engaged by the contractor or where services are provided for less than 90 days in a financial year should be applied. While the tribunal accepted that one contractor met the requirements of both exemptions, based on credible oral testimony and supporting documentation, it found that Roofing Services had not met the evidentiary burden in relation to other contractors, including Aquafix Roofing, NSM Roof Services, CWT Roofing, and Sunshine Coast Maintenance Plumbers. The evidence presented, such as safe work method statements and insurance policies, was either insufficient, not contemporaneous, or failed to establish who actually performed the work. QCAT reiterated that the onus is on the taxpayer to prove, on the balance of probabilities, that exemptions apply, requiring specific job-level evidence rather than general assertions about usual practice or industry norms. The tribunal also cautioned that even where re-roofing work is generally unsafe to complete alone, this does not automatically meet the legal test for exemption unless it can be shown that 2 or more workers were engaged by the contractor and not by the principal. Ultimately, QCAT confirmed the Commissioner's decision to disallow objections in relation to most contractors, set aside the Commissioner's decision in relation to SAS roofing, and directed the objection be reconsidered in line with the Tribunal's findings. This case highlights the importance of clear, consistent documentation and evidence when seeking to rely on contractor exemptions under payroll tax laws. By way of an update in the wage compliance space, courts across multiple jurisdictions have handed down a series of decisions in recent weeks relating to long service leave entitlements. These cases span a range of issues, including continuity of service across state and international borders, as well as employer obligations to contribute to portable long service leave schemes, particularly within the construction industry. While the details vary, the growing body of case law reflects an increased willingness by tribunals and regulators to scrutinize long service leave entitlements and employer compliance under state-based legislation. Of note are Infosys Technologies v. Fox, Energy Australia v. Co-Invest, Detector Inspector v. Co-Invest, and Corporate Air Charter v. Australian Federation of Air Pilots. Employers with mobile workforces, construction-related roles, or international transfers should carefully review their long service leave compliance and ensure they are properly classifying employees and contributing to the appropriate schemes. This recent wave of cases highlights that assumptions about long service leave entitlement boundaries are increasingly being tested before the courts. The Federal Court has confirmed that an employee can be genuinely redundant even where the duties of a proposed new role remain largely the same, if the redeployment involves a material reduction in hours and remuneration. In Bayer Castle v. Deputy Commissioner of Taxation, the court found that Ms. Castle, a part-time early learning assistant, had been made genuinely redundant after her employer offered alternative roles with 20 to 40% lower hours and salary following a restructure. Although the duties were similar, the significant reduction in working conditions meant the new roles were not equivalent to her original position. The ATO had classified the termination payment as a regular employment termination payment rather than a genuine redundancy payment, which is taxed more favorably. However, the court disagreed, holding that genuine redundancy can still apply where the position no longer exists in its original form, including where days, hours, and remuneration have materially changed. While the ATO has since appealed this decision, the case is a useful reminder for employers to carefully assess termination circumstances. It confirms that substantial changes to working conditions may amount to redundancy, even if some core duties are retained. Employers are advised to ensure proper tax characterization of termination payments and seek advice if uncertain. Thank you for joining us for our April 2025 update. If you have any questions or would like to discuss how these developments may affect your business, please don't hesitate to contact your local RSM Global Employer Services team, myself and Peter in Melbourne, Gina and Neve in Perth, or Jason in Sydney. We look forward to supporting you through the 2025 FBT compliance season.